Alright, I'm going to do something different here. This video will be about 5 to 10 minutes long. Do like a short series on how I look at the stock when I first look at it, how I set up my trades, and basically this video is just going to be about the overall picture slash where are we in the chart. So the reason that this is the first step of the way I trade is because it's the most important in my opinion. You need to know where you're at in the chart. If you don't know where you're at in the chart, how are you going to sell at the best spot? How are you going to get out at the worst spot? How are you going to save yourself money? How are you going to make yourself more money? It's not always going to be extremely accurate, but even when you know that you're in the wrong spot or you know that you're close to the best spot to sell, you are going to save yourself so much frustration in the market. So much frustration. When I didn't know this stuff, I was basically just guessing. I was just following FOMO and trying to chart a little bit, but I didn't know what I was doing. And now that I know this stuff, my trading is so much better. I make money consistently in the market, and just because I would say this is the number one reason, just knowing where I'm at in the chart. I know when the stock is trending one way. I know when it's trending against me, and yeah. So basically, this video, overall picture, where are we at in the chart? Let's just start off with SPX. So I'm zoomed out here on the 6-month time frame, and first and second wave, we don't really need to go into that much. It's pretty easy to see. 1929 crash. And then we get this 1, 2. I have the third wave around 69 all the way down here to 75. And then we get the melt up all the way up to the dot-com bubble. So one thing to point out here is the two biggest crashes in the market's lifetime were the 1929 crash and then the dot-com and the Great Financial Crisis. So those are two huge points in the history of the market, and those are also the second and fourth wave overall. So those are pretty easy to see. So now that we have those out of the way, we know we're in a fifth wave overall. This is the final move higher. But I can't see the smaller wave, so what do? I go down to the 3-month time frame. So now I can see this move higher. We get a red candle right here. This has got to be the second wave. On SPY, SPX, you're not going to get exactly the Elliot wave rules. This one only retraces the 0.23 fib. But you have to just roll with it because obviously this is an impulse move. So I have 1, 2, and then a 1, 2 of a third wave. This right here is actually the third wave of a third wave. You can see it if we go down to the 2-week time frame. You can see here, this is somewhere in here, 1, 2, 3, 4, 5. The end of the third wave is right there. And then we get the COVID crash into the fourth wave. And then that big melt up from 22.10 all the way up to 48.88. That is the end of the third wave. How did I figure out those waves? I zoomed in farther. So then we get the 2022 pullback, corrective pullback here. That's wave 4. And now we're melting up again, so we got to be in wave 5. On the 2-week time frame, I can see wave 5, so I'm going to go ahead and stick with it. We have 1, 2, and I go over this in the market all the time. Market updates. 1, 2, 3, 4, and 5, like that. And we're currently in finishing up wave 3 of the fifth wave. So overall, where do I see us in the chart? I see us at the very end stages of this overall third wave of the final wave higher. I'm looking for a fourth wave pullback, and then that's going to be buy the dip again, and we don't know how high the fifth wave is going to go. I suspect maybe 7,000, but we'll see. So that's kind of how I broke it down. I start off in the highest time frames, figure it all out, and then I go down on lower time frames. And obviously, if I'm trading, then I'll go down even down to like the 5-minute time frame sometimes. This is how you do it. And one thing to note, I always use log chart. On smaller time frame, regular and log chart are pretty much interchangeable. But on higher time frames, you can't really chart on regular time frame or regular charting. Because here is log chart. Now let's go to regular. Completely different chart. Now you have the great financial crisis down here, and then this huge melt up. It looks like this is like a huge third wave or something. It just completely changes the chart, and way harder to chart. Doesn't make any sense to me. But one thing that it does help out with, so on the log chart, let's say we do go to 7,000. So normally after a cycle continues or a 5-wave move finishes, I would say it's going to pull back to the 0.5 fib. The problem here is 138 is a 0.5 fib on SPX. But on the regular chart, this is one time where it actually makes sense to use it. The 0.5 fib is at like, oh, that's not right. I gotta go all the way to 7,000. It's at like 3,500 all the way down here to 1,535. Which one sounds more reasonable for a crash? I would say the regular chart. So I would say I use the log chart 95% of the time, but sometimes for like retracements, the regular chart will give you better targets. So that is pretty much it for seeing the overall picture, where we at in the chart. This is going to save you so much time, so much money, so much frustration. Obviously, it takes a lot of discipline to trade as well, but this is going to save you so much money. I cannot stress it enough. So zoom out as far as you can to zoom in as far as you can to get the correct count. Even if you're a little bit off, you'll still have an idea of the range you want to buy and sell. So I'm going to leave it at that for this first video. I'll probably do 3 to 4 more videos talking more about Elliot wave. I'm going to go into supply and demand. I'm going to go over gap fills, Fibonacci, maybe a few other things, but those are the main ones I use. But I'm going to start off with this one right now, overall picture, and that's it for this video. I'll probably put these out over the next couple of weeks, just so they're there if you're wondering how I am coming up with my targets or wondering how I trade. So it should be pretty helpful, I think. Hopefully that was pretty easy to follow for SPX. Zoom out to zoom all the way in. All right, that's it. That's it for this video. I will talk to you in the next one.